everyone. Good morning and welcome to the market. I'm Avan Dabash. With me is Anisha Jain as well as Pankaj Poddar, and we're waking up to very jittery cues from Wall Street. So just to put everything into context, yesterday we did manage to wrap up the day on a firm trading note above the 18,150 mark with conviction. But this morning you've got quite a bit of choppiness on the global screen. So to start off with, you've got steep cuts coming in on Wall Street, and that's largely ahead of what could potentially take place as the FOMC's last rate hike this time around. So that's something that we'll be closely watching out for. It's flat for the US futures. The number of job openings in the US as well are at a 2-year low. It's taking it across to the Asian screen as well, and it's pretty much mirroring what Wall Street did, barring the Nikkei. And you've also got the SGX Nifty, which is indicating a pretty weak start this morning. But just taking a look as to what exactly the street is penciling in from the FOMC, majority is expecting that there could be a rate hike to the tune of 25 basis points this time around, 5 to 5.25%, which would be the 10th consecutive hike. So rates could jump as high to the 2007 levels, and there is pretty much a strong possibility of that hike with an 82% probability as per the CME. Of course, we'll be watching out as to whether or not there is going to be any commentary on the rate pause and whether or not this is going to be the rate hike for the last time. So ahead of that, clearly, Anisha, you've got a screen across the globe which is indicating quite a bit of weakness this morning.
Oh, well, yes, and I think most important will be the commentary coming in from US Fed on the regional bank, because overnight that was a big rout that we saw in the markets. In fact, the regional banking index in the US slid as much as 5%. The likes of PacWest as well as the other regional banks like Western Alliance, etc., were down anywhere between 15 to 30%. Trading was halted for a lot of these counters, and that is what created that risk-off sentiment, and that's the reason the S&P, Dow, etc., were down anywhere between 1.5% in the overnight trading session. So JP Morgan's Jamie Dimon saying that perhaps the pain is over, or part of the crisis is over, but the street is not baking that in. A lot of weakness when it comes to the US, banking names. But there was a lot of risk-off sentiment which was at play when it comes to the world of commodities as well. We saw the crude prices fell as much as 5% overnight. It's now closing close to around that $75 to the barrel mark. And remember, this is the lowest perhaps that we have seen so far in a few months. In fact, it's the biggest intraday decline that we saw since January 2023, and it's the lowest level since March of 24. Of course, there's this worry about the US bond default as well. That's weighing on the sentiment. The comments coming in from Janet Yellen yesterday. And then ahead of Fed policy, there's this overall weakness with respect to demand momentum that the street is penciling in. Of course, while it is good, a good news for the users, the likes of paint, aviation, etc., it's a bit of negative when it comes to oil explorers as well as for oil marketing companies. It's a bit of a mixed reaction coming in. So we'll watch out for those counters. But Pankaj, back home, of course, it was about the fact that the positive momentum continued yesterday in the trading session, and then a lot of result reactions look more positive than negative back home.
Absolutely. At least the commentary, the way they are declaring numbers are all looking on the positive side. We have Tata Steel, which will be reacting today, and a lot of other mid-cap companies, the likes of Chola, various others, which of course we'll get previews going in just a bit. Let's go across to Peter McGuire now. Crude was one of the big stories overnight, falling about 5%. Peter, what is the sense that you get regarding the fall in crude prices?
Yeah, absolutely, Pankaj. I mean, it's hit the market by surprise, and I think it's really, coming to home to roost. Some of this bad data coming out of the States, bank issues, Janet Yellen, and of course, the softness from the Chinese economy. So I think there's just a bit of a melting pot at the moment, and the markets have given up that strong gains that they had a couple of weeks back, and it just seems to be in a little bit further structural decline.
So where do you see crude prices settling down, at least in the near term?
Well, I think you're going to see some further softness from here. It's at $71 a barrel and 75 for Brent, so you might see, high 60s for WTI. It's very much a day-by-day proposition. I want to see what happens as far as the Fed, what's happening with the ECB, and the overall theme. But at the moment, you've got to say it's correcting to the downside, and is there much more falling to happen over the next week or so?
Given the fact that you also have another data point, which is the fact that China showed that the manufacturing activity over the weekend fell quite unexpectedly, given that it's one of the world's largest energy consumers, a top buyer of crude oil, how did this influence prices and what's the outlook?
Well, exactly. I mean, that's a concern from the Chinese perspective, and we're conscious as far as, slowdown there, and that's all going to add weight to a market that's looking a little bit fractured at the moment. So it quickly turns, and it's turned very much to the downside, and we've just got to see from a demand picture how it all moves forward. But it's certainly not rosy. Wonder if OPEC Plus are thinking of further cuts because they want $85 a barrel. So it's going to be interesting how it plays out.
The crude prices. But Peter, do you think this was a bit of a knee-jerk reaction? You expect it to stabilize back around that $80 per barrel mark? Or at least in the near term, we are likely to see this volatility and weakness is likely to persist?
Well, I think we'll see further weakness, and I wouldn't be surprised, but the volatility, absolutely, when you see 5% washouts in a session, that's volatile. So everyone's short at the moment. They're all just sitting on their hands, seeing how it all rolls. But, yeah, there's a lot of nervousness out there. Traders are realising, the dynamics at play, and it's just a little bit of a confused market at the moment. So we've just got to see how the rest of April goes. But, pardon me when I say that, the rest of May goes. But I think we're going to see, increased volatility.
Was the take coming in as far as crude is concerned, so definitely something to watch out for the trading session today. As I pointed out earlier, it's a bit of a mixed queue coming in for the oil marketing companies, but positive for the likes of aviation, paint companies. Aviation, of course, is going to be in focus on account of that entire Go First saga as well. We saw how the company has filed for voluntary insolvency as well, so that would play on the minds of investors as well. Plus the entire group of companies will be in focus, as well as the bankers to go first will be something that we'll have to watch out for. But back home as well, overall the earnings overnight were quite positive, the likes of Tata Steel, etc. And even if you look at the earnings which are expected today, we are expecting a decent set to come by from Titan. The smaller names like Spandana, Spurti, Home First managed to report a good set of numbers. Ambuja was largely in line with expectation, but a weak set coming in from the likes of Saskin, etc. So we're watching out for all of that. But let's go back to my colleague Vinny. She's standing by to talk to us about what was the global commentary like, because a lot is happening, right from the words coming in from Janet Yellen, the weakness in the regional banks, and now the crude drop as well, Vinny.
Absolutely, and let's not forget the FOMC meet. The Fed rate decision will be coming in tonight as well, and that is what we're keeping an eye out on now. Lauren Summer has come out and said that what they're saying coming in is she believes that unfortunately does not think that the Fed can actually take much of its worry list, and what she also believes that they will be actually weighing in on whether to raise or pause the interest rates. Also, she doesn't think that the government has shown that when institutions are mismanaged and blow through all their capital, and that their shareholders are going to get out with nothing. So that's the word coming in from her. But we also have the former U.S. Treasury Secretary who spoke as well on regional banks which are at risk if the FDIC insurance isn't fixed. Now, what she also says that they absolutely need to fix the immigration in the U.S. for jobs as well. Lastly, we have the word coming in from David Rosenberg, who said that we have possible debt default on our hands, and that is spreading, given that the banking crisis is also there. They believe that the Fed is actually going to raise the rates as well tomorrow, and they're focused on inflation rates that is actually lower now than in July 2008. So surely concerns coming in that we will be seeing a Fed rate hike this time as well.
Okay, so that's the take coming in as far as the global view is concerned. Thank you, Vinny, for joining us. But let's talk about the cues which are closer to home, and that's about earnings. Let's start with Tata Steel itself, because the numbers look much better than expectation, at least as far as the revenue is concerned and profitability as well, Pankaj. The consolidated profit came in at 1,705 crores. We have seen positive commentary as well. The deleveraging was also something that the brokerages liked. Did you go through the numbers? Anything that stood out for you with respect to Tata Steel and any other numbers?
So India, of course, did better than what was expected. Europe did not do well, and I think it made up for it. But as you said, deleveraging of the debt came in as a surprise, which came down decently in the quarter. So it'll be interesting to see, but definitely not as bad as what the street was penciling in post the numbers for Tata Steel. I think that will be the most important reaction. All others are definitely smaller or with less interest as compared to what Tata Steel can do. And I think this is the first large steel company as well.
Yeah.
So this will have an impact on the sector as a whole as well.
Yeah, but other than that, Ambuja was
Ambuja,
broadly
yeah.
in line with expectation. There was weakness when you talk about numbers coming in from Aztec Life Sciences. There's a resignation at the top level. Saskin Technologies disappointed with what, a 45-50% decline in profits sequentially. However, having said that, Home First was a good number to watch out for. Spandana Spurti saw a big jump as well. And then, of course, Tata Steel is something that we'll watch out for in the trading session today. But yesterday, we spoke with Harsha Upadhyay, the CIO at Kotak AMC as well. He believes that banking is one space that will continue to outperform. Listen into his views.
Clearly, we have been positive on many domestic-oriented businesses. Clearly, domestic growth remains more resilient than global growth. Banking remains one of the top sectors across our portfolios. We have seen credit growth improving. Asset quality issues have kind of subsided quite a bit. Overall situation for the banking system growth seems quite conducive, and we remain positive on this. In fact, this is one of the sectors which will have significantly higher earnings growth over the next 2 years as compared to the market. We are also positive on a few other domestic businesses such as industrials, auto, cement, etc. All of these pockets, we believe that there is significant growth ahead. And if we make the portfolio cautiously looking at the valuations within the sector, then I think there is definitely upside that can be captured.
Lots of stocks to watch, but let's connect with our charters to find out their outlook on the markets going down the line. Naresh Mirani is with us, and we've got Kunal Bothra right here in our studios. 6th straight day that we've extended those gains, Kunal, and with the index perched around the 18,150 mark, do you think we're in for a bit of a pause?
Good morning, Avan. So, yesterday I was mentioning that how closer to the 18,200 mark, the markets are bound to take a bit of a pause or a corrective phase. I think we've started off, we could probably be starting off the corrective phase for the indices, from the 18,200 odd levels, which we managed to hit yesterday. I think now this phase of correction could probably last for at least a couple of days, if not more. I think closer to the 18,000 mark, if we manage to correct towards that level, that's a zone where I believe it's prudent enough to try and take long positions back again. Now, interestingly, yesterday's data indicates that there was 9.5 to 10% jump in the open interest for Nifty, which means on closing basis yesterday, there was fresh addition of long positions. Now, it's going to be very important to see how the longs behave today, because after an 80-point gap down, whether there's an unwinding of those long positions, if that happens, we could probably be seeing the intraday correction a bit more steeper. But if there is no unwinding of long positions, then I believe that the market correction could be curtailed to maybe 80, 100 points odd on the index. So I think the first half an hour, first 1 hour could be crucial. If there is no major unwinding of long positions, I would expect the indices to remain flattish to rather into a range just around that 80 to 100 points on the negative side. But buy on dips is the strategy for today. Yesterday it was sell on rallies.
Okay, let's find out what Naresh exactly is penciling in for the index. And Naresh, do you concur with that same view that around the 18,200 mark we're in for a bit of a pause, or are you working with further target revisions on the upside?
So a very similar view out here. Like have been saying right from the start, from 16,800, and the best way has been to ride slowly and steadily, and at every resistance zones, take a little bit of a pause. So we took a pause at 17,800, a pause at 18,150 to 18,200, going forward where 17,800 becomes a support. So this is a case wherein we'll take a few days of a pause. The trend continues to remain up. In this case, the problem is if you look at the Bank Nifty at 43,300, 500, it is just 1.5-2% away from an all-time high. I would find it difficult that we can take it in a single sweep in the first attempt itself. So out here, a pause is warranted and what is expected. So going forward for the next week, I would expect more stock-specific action. So on the Bank Nifty at further rise, it's a book profits. On the Nifty, it's still a hold because I would not expect a major correction also as of now. So for now, it's a hold on the Nifty, but a book profit going forward for Nifty banks.
Okay, so book profits, and that's what SGX Nifty is also suggesting. It suggests a decline of almost 70 to 80 points to start the trading session. And remember, a couple of these big sectors are going to be under the cloud today. Banking sector, of course, will be reacting to the Go First insolvency as well. Plus, the IT sector will be under the weather because of the fact that the US regional banks were plummeting overnight, and IT companies have a lot of exposure when it comes to the US, as well as the BFSI forms a large contributor to their revenue as well. So both of these spaces will be under pressure. But let's go across to our chartists and understand what the top recommendations are this morning. Kunal, what's on your list?
So I'll go with mid-cap names, and again going with the stance that most of the mid-cap stocks can tend to outperform the large-cap names, at least over the near term. Two buy calls. The first one is Aban Hindustan Copper. The stock looking attractive yesterday. The stock giving a rounding bottom breakout on the daily charts, breaking past about the 104 levels. So the risk reward is also attractive at current levels. Buy with a target of 112. Stop loss could be kept at 100. And the second would be Aban Astra Micro. Again, interesting breakout because the last 4 or 5 days we've seen some excellent jump in volumes for the stock from 290 levels. The stock closed yesterday about 310. My expectation is that the stock is now going into a different level of a breakout on the upside and could possibly retest the previous major swing highs of 2022 as well. So buy with a target of 330, stop loss at 305.
I like, Kunal, how there's a clear red on the screen on account of your ties. Well, a clear indicator it's not a day to buy, perhaps.
It's on purpose.
Clearly, and the message is loud and clear. Naresh, what about you? What are the stocks that you are recommending, and
But
is
what
it
color?
and what color exactly?
But it's also a nice and blue jacket, so that indicates that maybe neutral things could be there.
Marginal bearish.
Marginally, okay.
But Naresh, what about you? Which color are you picking and which stocks?
So all on the buy side. So first is a buy on Axis Bank. Post the results, the stock saw a little bit of a correction, and it has still been an uptrend, not able to break out, just like the way we saw a breakout in ICICI Bank. So on dips today, this would be a good entry point, wherein we'll keep a stop loss at 848. Expect a slow and steady bounce towards 910 levels in the short term. Second is a buy on Biocon. This is an interesting stock for the fact that one of the few names which went back all the way down to March 2020 levels, March to June 2020. From those levels, it has started reversing, started making a 2-3 month high yesterday. Should see more momentum once it can sustain about 245. That would indicate a long-term bottom is in place and the stock could start a mean reversion trade going forward. So out here, a buy with a short-term target price of 260 to start with, stop loss at 230.
All right, that's the view coming in from Naresh, picking out some interesting stock ideas for our viewers. All right, let's shift gears then, and clearly it is Go First, or Go Air, which is in the spotlight as the lenders of Go First. They'll be meeting today. Remember, the airline has gone bankrupt. They filed for voluntary insolvency proceedings, and sources have told ET now that the lenders have an exposure of close to over 6,500 crores towards Go First, and the airline has not even informed them before filing for insolvency. So it's a clear mess, a lot of turbulence for Go First. Let's take it across to Ankur Mishra. He joins in with all the exclusive details. Ankur?
Yes, sources say that Go First lenders are set to meet soon after the airline has decided for voluntary application in the insolvency court. Now, sources also say that lenders were not informed. There was no formal communication which was sent by the company about this application, which they had an intention to file. Now, as soon as the court admits the petition as an official procedure, lenders will receive notices from the court, and future course of strategy needs to be decided by the lenders on how to go about this case now on recovering of the dues. As far as the total exposure is concerned, we learn through reliable sources that at least an exposure of rupees 6,500 crore is likely to be there from the airline, and lenders like Central Bank of India may have an exposure of over rupees 1,500 crore. Similarly, Bank of Baroda may have an exposure of over rupees 1,400 crore from the airline. Now, as soon as the insolvency proceedings begin in the court, the lenders will have to present their case in the court, and accordingly, the strategy is being chalked out by the lenders. Now, we need to wait and see how soon the court admits the petition so that the actual IBC proceedings begin for Go First.
Well, it's a developing story and we are tracking that for you. So definitely a lot of the banking names as well as the aviation names will be in focus on account of the turbulence that we have seen in Go First. But can't say the same about Tata Steel because it was a rock solid number that the company reported this time around. What are the brokerages making of it? Vamakshi is here to tell us all of that. Hi, Vamakshi.
Well, yes, Tata Steel has reported a strong set of numbers as compared to our estimates, and we actually have a few brokerage notes that came in. We have one from JP Morgan wherein they've maintained an overweight rating with a target price of 150 per share, while Morgan Stanley has maintained an equal weight rating with a target price of 110 per share. Let's look at the note that came in from Morgan Stanley first. They believe that the good beat was led by the standalone business. The European business, however, struggled. When we look at the standalone EBITDA, that came in much stronger, and this was led by both better realization as well as lower capex. But the consolidated EBITDA was lower even than the standalone, as the European business and the Tata Steel long subsidiary continued to post EBITDA losses. So given that, Morgan Stanley has actually maintained an equal weight rating. On the other hand, JP Morgan believes that the strong India operations offset the weak European operations and drove the large beat. Now, given the sharp fall in coking coal prices, margins are expected to remain stable. Debt reduction is a positive that is coming in for the counter, and in fact they're expecting to see a positive stock reaction as a result to the Q4 numbers. So given that, JP Morgan has maintained an overweight rating.
Thanks, Vamakshi, for that. But as we pointed out, IT sector is going to be in focus as well. There was a fresh note that Morgan Stanley wrote wherein they said that they have a bit of conservative outlook, but there is a case to be made to become constructive as well after the beating that the sector has got, because we've already seen sharp corrections not only in the stock prices, but the EPS cuts have also been made, in tandem with what the street is expecting with respect to the slowdown in US, etc. Now, they say that there's a potential that US will see a soft landing, and that makes a view for having a constructive outlook on the IT sector. Plus, the public cloud cycle has room to run going forward as well. So they're expecting the spends on cloud and digital to continue. The margin gains are expected in FY24 because the weakness with respect to the supply side is issue. Attrition is coming down. Wage inflation has softened. So that's the reason they're expecting margin improvement as well. The valuation, of course, has become a lot reasonable. It's very close to the 5-year averages, very close to the 10 and 12-year averages as well. And of course, the stocks have bottomed before the growth, worries come to the foray. So they are saying that the stocks have bottomed for now. And from here on, they're only expecting things to improve. So that's the word coming in on IT. Just wanted to quickly bring up the data point with respect to the BFSI and America exposure that some of these IT companies has. Emphasis, of course, reported a very weak set of numbers because it has the biggest exposure when it comes to the BFSI vertical, 64% at that. The large IT companies have exposure anywhere between 30 to 35%. And then you have likes of Coforge, LTI, Mindtree, which have a bit of higher exposure when it comes to BFSI. North America is quite important for Emphasis, LTI, Mindtree, and even HCL Tech gets almost 63% of the revenue coming in from US, and with the weakness coming in across the board, these are the stocks which are the most vulnerable, to the weakness and the headlines coming in from the US.
Okay, yes, indeed. And that IT sector is in focus. Clearly, Morgan Stanley saying that there's going to be an EPS cut on account of the weak Q4 as well as conservative outlook. It would be interesting as well, Anisha, to get a take from our experts on the IT sector down the line. But away from that, then, Brent crude oil prices, as well as we highlighted at the get-go, have cracked and are now hovering around levels of $75 a barrel. That's the lowest that we've seen since the 24th of March, the biggest intraday decline since the early start of January. Let's get in Somit, who joins in with all the details, and more importantly, Somit, the reason as to why we're seeing crude oil prices crack like this.
Well, the reason behind this sudden drop in crude oil prices is the fact that there are worries about US bond default, and then there is the policy rate hike that is upcoming, which has also led to this fall in crude oil prices. Then the manufacturing activities in China also unexpectedly fell in April 2023, while Iran's crude production has been continuously rising and is now at around 3 million barrels per day as per the oil minister. And these are the reasons why we had seen such a sharp drop in crude oil prices in trade. Now, what would be the impact on India? Well, on the economy, it's positive because nearly 85% of our crude requirement are imported, and every $10 per barrel drop in crude oil prices narrows the current account deficit by around 14 to 15 billion US dollars. When it comes to retail inflation, it comes down by around 50 to 60 basis points, while the wholesale inflation reduces by around 125 to 135 basis points. And also a $10 per barrel drop in crude oil prices on annual basis decreases the deficit by around 12.5 billion US dollars. Now, on the companies, if we see for the oil marketing companies like Indian Oil Corporation, BPCL and HPCL, the impact is largely neutral because lower crude oil prices does aid the marketing margins of oil marketing companies. But on the negative side, there's also inventory losses whenever we have seen such kind of sharp drop in crude prices. For oil explorers like ONGC and Oil India, it's a negative impact because lower crude oil prices means lower realization, which means lower profits. And according to analysts, every $5 per barrel drop in crude oil prices lowers ONGC and Oil India's EPS by around 7 to 12%. Then there are a host of other sectors like paint, aviation, lubricant manufacturers, tire and cement, and all these sectors, nearly 40 to 50% of their total cost is either directly or indirectly related to crude oil prices, and a reduction in crude oil prices will definitely reduce the total RM cost or raw material cost for these companies and boost their margins. And lastly, when it comes to specialty chemicals, there are a host of specialty chemicals where the prices of these raw material are directly related to crude, like Balaji Amines, Alkyl Amines, and there is Camlin Fine Science, Rosari Biotech, Nossel, Aarti Industries, Atul Organics, Deepak Nitrates, and many more. So do keep an eye out for these stocks in trade.
Okay, Soman, thank you so much for that. We'll let you catch your breath, but in the meantime, let me take opinion from Kunal as well as to what the charts are suggesting on crude. Did you see it coming at all, the sharp, nosedive in crude prices, and is it going to be an equally sharp pullback?
No, I don't think so. The pullback could be equally sharp because there were already two pullbacks from 74, 75 to I think 86 or 88 in the last 2 or 3 months. There were two or I think three such. The third one was more of an intermediate pullback, but there were three such pullbacks for the crude prices. But I think 88 is now defined to be as a major resistance band for Brent crude, and the more the asset class tests the lower end of the band, the higher the probability that the levels of 74, 75 would be broken down significantly. So what we are actually going through is a phase where crude oil is trying to test the resistance on the upside. It's been meeting a lot of supply at the higher end, but on the downside, I think the moment the crude oil breaks below the $71, $72 per barrel mark, I think there could be a sharp correction of at least another $8 to $10, if not more, for the asset class. So I would be of the opinion that possibly the asset class is heading much more on the downside, maybe closer to that $60, $62.
Okay, there you have it. That's the view coming in on crude oil prices. Naresh, in the meantime, let's also get in your take as to what the outlook is on Tata Steel. After having come out with its quarterly performance, how do you believe the stock is potentially likely to react today?
So technically, the stock is shaping up for a bounce towards that 120 mark, 2024 mark in the short to medium term. And the stock has made a base around 102 levels. Over the last 4 months, it has made two bottoms around those. So it's a buy at current levels. Stop loss would be a little deeper in that case, would keep a stop loss at 105 and take a positional target price of 120 to 124. And mind you, the stock has not bounced back as much as the rest of the steel names have. The stock on the higher end made a top of 150 back in 2021. So out here looks like a slow and steady up move towards 120.24 in the short term.
let's go across to Lisa now. Cummins in USA declared its numbers. They gave some comments about India. Lisa, tell us more.
Well, Cummins India, parent Cummins Inc. has reported robust set of numbers, and on the back of that, they have upgraded their guidance for both revenue as well as the margin. Well, on the revenue front, the guidance has been upgraded to 15 to 20% versus the earlier 12 to 17%. Also, the margin has been upgraded to 15 to 15.7% versus the earlier 14.5 to 15.2%. Well, on the outlook, that also looks strong for Cummins India as well, because the customers are indicating strong visibility for second half of the year. On the India performance, Cummins is seeing growth in the Indian market. They say that in Q1, India contributed around 5% to the LTM revenue. Also, the Cummins JV contribution, which does not form part of Cummins India, that has accounts for 19%. But the power generation segment, that has grown 30% year-on-year segment, and that bodes well for Cummins India. So the total revenue for India for Cummins Inc. business, that grew at around 21% year-on-year. The outlook for India, that remains the same what it was in the prior quarter. They said that they expect that the Indian revenue, that will grow at a modest 1% increase for 2023. Well, Cummins India will be reporting their earnings on 24th May, and more details on the performance as well as outlook, that will be clear that time.
Okay, Lisa, thank you so much for joining us with that quick take on Cummins as well, and the read-through coming in from the parent earnings. Nuresh, your take as far as Cummins is concerned on the chart, and I also wanted to get your take regarding Spandana Spurti. Very strong set of numbers, the net interest income jumping by 51% on a sequential basis.
So Cummins India, to start with first, the stock has been trending up, which has been the case with all capital good names. In the recent term, it did a little bit of a correction from 1700 levels to 1500. For the near term, I would expect it to be in a range, not expecting next leg of the move as of now. So time for some range bound moves between 1500 to 1700. So not really interested in this name in the capital goods space. The stock has already outperformed quite a bit. Continued like L&T, and then looking at Thermax in the capital goods space, which has not done well. Spandana Spurti looks an interesting chart because the stock broke out yesterday itself, saw almost a 3 to 5x jump up in volumes, and the stock has been consolidating in a sideways range for the last 6 to 8 months between 500 to 600 and 620 levels. So yesterday was a breakout. Today that should be a follow-up, and the next target price for the stock would be closer to 750. So if it's a mild move today, that would be an entry point with a target price of 750. If it does a big gap up move, then the risk reward would be off. But technically, the stock has broken out yesterday, and today ideally should see a follow-up.
Okay, let's move right on and hear it out from Hemang Jani. He shares his outlook on some of the new age tech companies and whether or not it's a good time to buy.
The overall consumption, story is not that bad. Yes, because of either raw material changes or operating costs, the operating numbers have not been great. So I would rate Aditya Birla Fashion as one of the companies which will remain there as a top company, in the retail space. And the stock has corrected. So typically you should be buying into such franchise when the sentiment is not good. So I do think that, names like Aditya Birla Fashion's Trend should do well for investors, even from current price level. When we look at the new age companies, recently we have initiated buy, call on Zomato and Paytm. And the reason why we like some of these companies is that, on the one hand, the market caps have actually come down by about 50-60%. And when you look at the actual underlying operating performance, it has shown a lot of improvement. And we think that some of these companies, once they reach a certain level of operating profit or EBITDA, can actually grow very fast.
Okay, on that note, we'll step into a very short break, but don't go anywhere. A lot of stock-specific news to dissect, and we'll do just that when we come back.
Let's welcome across our next guest on the show. Deepan Mehta is now with us. Deepan, thanks so much for taking our time for us this morning. Could you talk about the numbers that we have seen so far? Yes, a lot of stocks are not reacting to good set of numbers or inline set of numbers, but do you think overall the trajectory is on the decent side?
Yeah, good morning and thank you for having me on your show. I think this is one of the good earnings season at least so far, whatever we have seen, I think is pretty decent. And apart from a shocker like Infosys, by and large, I think numbers have been in line or better than street expectations. And we are seeing very good traction in many industries. I mean, software, of course, there have been few bright spots and few disappointments. But by and large, I think banks, NBFCs, autos, to an extent, engineering, construction, real estate, I think all of these companies have come out with excellent set of numbers. And maybe I think, this earnings season may turn out to be a good one. And perhaps it could result in a breakout on the upside. I think the market has been moving in a very narrow range for many weeks and many months. But we need a good earnings season like this to break out on the upside.
In terms of earnings, bank numbers are extremely strong. Commentary is strong. Why do you think stocks are not reacting on the upside? Are people worried about margins going ahead and they want to just wait out for another quarter to see the momentum?
I think expectations were built in for good numbers from the banking sector. Even last quarter, that's December quarter numbers were quite impressive for the entire banks, all the banks and NBFCs as well. And Bank Nifty, of course, as you see, has been taking leadership position. So it could be a bit of expectation being priced in. Also, I think a lot of investors are of the view that perhaps going forward, there may be some challenges. There could be some compression on net interest margins. And now with today's news of this go first, I think it's certainly going to impact a few select banks. So there could be, some concerns in terms of raising resources, a slight crunch in the net interest income. Of course, I think volumes will come into play. But by and large, it does seem that whatever we saw just now was the kind of, easy pickings, the low-hanging fruit for the banking sector. And now the going may get a little bit tough. But I think that over the next few quarters or so, we will see more selectivity in performance and returns amongst the banking sector as well. And the stronger banks who are focused on CASA and are focused on good NPA management, I think they'll turn out to be the real winners.
Okay, you also had Dipan Cummins Inc., which came out with their outlook saying that they've raised the full year guidance to 15 to 20% for India as well. They've said that the total revenue, including the JV, is up by about 21%. We're anticipating the numbers of Cummins India later this month. But what's your outlook if you track this company back home?
Oh, sorry, I just missed the name of the company.
Cummins?
Cummins, yeah. I think Cummins is in a very interesting space. We have been very positive on the entire engineering capital goods space. And Cummins, I think, is one of the leading engineering companies. I think it's gensets and diesel engines. Diesel gensets are absolutely world class. And of course, they have the advantage of exporting to other Cummins subsidiaries as well on a transfer pricing basis. Valuations are reasonable compared to historically what the stock has traded at. And I think after many quarters of sideways to slightly disappointing performance, last 2 quarters, at least last quarter and this quarter, may be quite impressive. A lot of the cost increases, I think, have been passed on, and now we are seeing subdued raw material trends, and that should benefit the margin management for the company. And the way we are seeing infrastructure projects take off, I think there's going to be good demand for the company's projects or products as well. So very positive on Cummins per se. And it's a premium player, MNC company, and always has traded at a very high price to earnings multiple. So let's not get too impacted by that. But on the whole, I think next few quarters look very interesting and very positive for Cummins.
Dipan, you talked about banks, and of course they are going to be in focus on account of the Go First news as well. But what about these MFI plays or the NBFCs? Spandana Spurti reported a great set of numbers. Home First also was quite a good set with the NII jumping almost 31%. And then Fino Payment Bank also, when the profitability jumped up by around 25%. Any name that you track or would want to recommend?
So I think these are great times for NBFCs, and across the board, we are seeing that their top line has been zooming up because of a very advantageous interest rate scenario. How long that will last needs to be seen. And there's good credit demand as well. Overall, their credit costs are low because either they have completely provided for all the old losses, or there are no fresh losses coming through, and they perhaps become more circumspect when it comes to fresh lending. So on the whole, I think NBFCs will continue to do well. I think next 2-3 quarters. The key industry that NBFCs do service, that is real estate and auto, especially commercial vehicles and passenger vehicles, those sectors are seeing very good, sales, retail sales per se, and that should drive the demand for credit as well. It's just that, I want to be a bit cautious with the NBFCs. We had a kind of a big setback when post ILFS crisis, when a lot of NBFCs destroyed considerable amount of value. And therefore, we want to look at companies which have established a strong track record, which have performed well during crunch times as well. So I'm not getting too attracted to some of the companies which were impacted by the ILFS crisis, but are focusing more on companies which handled these tough times much better. Companies like Bajaj Finance, Cholamandalam, Sundaram Finance, I think they were least affected by what happened during that period. But companies like L&T Finance, Poonawalla Finance Corp, IFL Finance, I think they were in kind of a very tough spot at that point of time. So let's just wait and see how these companies actually perform when the next kind of challenging times are there for the industry. But no doubt, I think next 2-3 quarters looks very interesting for NBFCs as well.
NBFCs looks an interesting space. Deepan, just stay on with us. It was a muted Q4 for Aztec Life Sciences. Company reported its first ever quarterly loss in the last 15 to 16 quarter. What's allying Aztec Life Sciences? Somit now joins us with all the details.
Well, Aztec Life reported a weak set of numbers. First ever loss in the last 15 quarters. Revenues were down nearly 53% on a YOY basis, and EBITDA declined by nearly 92% on a YOY basis. And the two key reasons behind this was, firstly, a sharp decline was seen in the prices of two of its key products, and there was high channel inventory. Now, if you see, the performance was impacted due to high level of channel inventories in India as well as in the export market, which resulted into demand-supply imbalance and a subsequent correction in the prices of two of its key products. However, there was one silver lining in the result, that was the CRAMS business, which has seen a revenue growth of nearly 12% on a YOY basis, and this was purely on the back of the fact that the company's herbicide plant, there was a ramp-up seen due to commercialization of one of its new product. When it comes to the outlook, now for the first half of FY24, the outlook continues to remain weak because the enterprise segment is expected to remain under pressure because of more product coming in, more globally, more supply coming in for two of its key products. Again, high channel inventory in India and the Latin market is also expected to impact the first half of FY24. When it comes to the CRAMS business, analysts are expecting a 40% growth in FY24, which should result in better profitability for the company for the financial year FY24, but for the first half, the outlook continues to remain weak when it comes to Aztec Life Science.
All right, Somit, thanks so much for that. Deepan, are you surprised by what's happening in the aviation sector? Do you think that makes Indigo valuation or a case for a larger market player to have better valuations?
I think it's when you hear news like this that you can really appreciate the business model and the management capacity of Indigo. The way they navigated all these so many challenges which have come for the aviation industry, right from substandard engines to COVID-related restrictions, intense competition at one point of time. And yet I think Indigo went on, this Interglobe Aviation went on adding capacity, went on adding new aircrafts. And now they have a sizable capacity in place as well, at a time when the aviation industry is seeing absolute blue sky scenario. I think passenger traffic is clearly peaking. There is pent-up demand, and next few quarters, at least on that front, looks very promising. At the same time, the yields, the average that they can realize per seat is at record highs, and a lot of the consumers don't mind paying a premium for getting a seat on the plane. Oil prices, which is one of the big costs, that is on the lower side. I mean, you as an aviation company, if you are solvent, if you have capacity, if you have good quality balance sheet, you cannot ask for anything better. So we are looking at Interglobe Aviation's numbers with great deal of excitement, and I'm pretty certain that it's a good trading bet at this point of time. And even the next few quarters look very interesting. We are seeing a kind of a duopoly taking place within the aviation space. And that's always very positive for incumbent players. Of course, you can't buy stock of Air India or the other Tata airline companies. So from that perspective, Interglobe Aviation is the only company that you can buy if you want an exposure to the aviation sector. Of course, there is SpiceJet, but that has its own issues in terms of balance sheet and amongst the other factors over there.
Yeah, true that Interglobe Aviation is the only investable name per se in the universe for a lot of investors as well. But Dipan, wanted your take regarding a couple of these other companies as well. Ambuja Cements came out with its earnings. The volumes were above estimates at around 8.1 million ton, but not a big jump up when it comes to the operational performance. Street was banking a lot with respect to margin expansion. A decent inline performance, you would say, right?
Yeah, that's right. I think I haven't seen the numbers very closely yet, but on the face of it, they appear to be amongst the better numbers within the cement industry. But our view on cement is negative, and its reasons are quite clear. While they are seeing decent volume growth, I think strong double-digit, mid-teens type of volume growth across many of the quality players, the inability to pass on cost increases because of competitive intensity is clearly a very big cause for concern. And all the cement companies are adding capacity at breathtaking pace. So at some point of time, you're going to have a glut situation or severe under capacity utilization, which will impact the profit margins. So keeping that scenario in mind, we like to avoid cement. You're better off buying the cement consumers. I think they are in very good shape. As we can see, the real estate companies are reporting record sales and looking at very good times going ahead. And then you have the infrastructure, the engineering construction companies, also the road builders, the ports, and also the infrastructure construction companies. I think they are also sitting on record order book position and a very good earning visibility for the next 2-3 years, if not more. And with government spending set to increase prior to elections, I think cement consumers should certainly be preferred over the cement manufacturers.
Cement consumers should be preferred over cement manufacturers. Okay, so that's the theme coming in, or the way to play infrastructure in a better manner. Earlier, we also got a chance to speak to Amnish Agarwal on ITC, HUL, various other consumer names. Let's hear out what he had to say.
You see, if you look at, say, last 3-4 years, whether you look at HUL, whether you look at ITC, some of the players, they had not moved at all. And particularly ITC, I think it was because of more your taxation and other structural issues, I think, which are now getting more or less sorted out. Because last 3 years, we had not seen any increase in your taxation meaningfully. So the stock has actually come up, it has rallied, other segments are also doing well. And we believe that there is still room for an upside. Our target price is close to 440 rupees. And I think the kind of momentum we have seen in the cigarette business in the past few quarters, if the next couple of quarters are good, then we could see if the next couple of quarters are also good, we could see the momentum continuing in ITC. Now, as far as HUL is concerned, I think the rural demand has been tepid. The profit growth has suffered. What works in favor of HUL currently is that their gross margins are down by nearly 6 to 7% from the peak. So while the value growth might not be there in the near term, your margin expansion should happen. But at the same time, we are cautious on the overall demand and the rural demand, given your risk of El Nino and the consequent increase in inflation, because that can actually delay the recovery as far as the rural demand and in particular and general demand is concerned. So to that extent, I would say that both these stocks can give you moderate returns from here, but definitely the momentum currently seems to be more in favor of ITC than HUL.
So Dipan, you said you would like to go with consumer cement names. The traditional consumer names, they have been underperforming for a while. Are you a fan of the likes of HUL, ITC, Nestle, Britannia, any of these old names?
See, I was surprised with Nestle's numbers, and that's perhaps because it is in a category where there's still adequate levers for growth, a little bit of under-penetration over there, and they have a larger footprint to capture within the rural markets. But HUL, I think, and some of the other FMCG companies, they are now, a lot of the categories they are operating in have reached maturity space, and volumes are going to be pretty tepid going forward. So I'm not that optimistic on FMCG per se. There could be selective exceptions to that industry. But by and large, I think if you want to play the consumption theme, you have to move away from FMCG. There are a whole host of other sectors, subsectors, which are looking very interesting. which are kind of moving up the value chain, where premiumization shifting from unorganized to organized, and higher retail spends are driving growth over there. And we spoke about aviation, but you could add hospitality to it, healthcare, entertainment, retail per se. I think all of these are doing exceptionally well. There could be a little bit of turbulence here and there, but by and large, these are secular growth stories. And you could buy the leaders over there, and I can expect those companies to outperform the FMCG pack by a huge mile if you have a 3 to 5 year type of an outlook.
Interesting takeaway, Deepan. Nuresh continues to be with us. Nuresh, is FMCG looking interesting? First, probably the index, or then if you have direct stock calls, that's also fine.
So the Nifty FMCG index is doing well thanks to ITC making those moves into all-time highs, and over the last 1 year, 1.5 year, ITC has been one of the best performing stocks. But that is not the case with the other heavyweight, which is Hindustan Unilever, which continues to be in a sideways range. But so if you look at HUL, the stock was at 2,500 back in April to June 2020 after the COVID move. And today also we are at 2,500. So the last 3 year return is getting closer to zero for HUL. But we are starting to see selective moves one by one. We saw a move in Nestle, wherein the stock surprised out of nowhere from 18,500 to almost 22,000 levels. The only other name which actually has been coming up on the radar is Godrej Consumer and Tata Consumer. But Godrej Consumer again went back to 900 levels post the Raymond deal. But that is a structural chart which still looks interesting. Till the time it holds about 900, the stock could again go back higher. Tata Consumer over the last 3 sessions has done well. So out here, selective moves are happening, but still not the best sector to be in. ITC also at 425 now. The whole juice is out, according to me, in terms of the rally. Here, the risk reward is not great. So overall, as a pack, I would continue to avoid now. Rather look at other spaces which are still in strong trends.
Right.
Okay, so that's the take coming in as far as some of these names are concerned. But I also wanted to bring on board Sumit as well, my colleague, because he's getting some exclusive information as far as Maruti is concerned. He's talking about how the company has managed to address the ambitious sales and production target that they have set for 100 of its suppliers, and they have a target of producing 4 million vehicles by 2030. Sumit, tell us what's the latest that you're picking up?
So, from the last few days, Maruti was announcing a number of steps. In fact, it announced how it was done last year, performance there, profit and everything, 42% up. But now, it has given an ambitious target to its vendors. The target is of producing over 22.6 lakh units this year. For the first time, it will be crossing 2 million mark. And the vendors, around 100 of them, were addressed in Dubai Suppliers Meet, and they were told that they should be ready for producing as much as 4 million units by 2030. That's a mammoth and quite an ambitious target by country's largest car maker. Also this year, kind of sales growth they're looking at is 14 to 15% sales growth they are looking at. Maruti is looking at, and vendors have been told to be ready to ramp up production. They can face some problem this year, but they should be ready to ramp up production as they see demand coming back in very good numbers. So 4 million target for 2030 will include 3 million domestic sales, 1 million export target, and by that time Maruti also plans to have 50% of the market share once again. So it is quite an ambitious target set by country's largest car maker before its vendors. Its vendors include Lumex, Sona, also Minda, and many other vendors. They have been with Maruti since last many years, but this is the ambitious target the vendors have been told about.
So that's the latest coming in as far as Maruti goes. Nuresh, any view as far as Maruti is concerned? In 2020, it was close to 8,000. It's still that level. Numbers at least 3-4% have been growing.
So technically, it's been a long time since Maruti actually has made a trend. The stock peaked out in 2018 around very close to that 10,000 mark. And very recently in October also, it came very close to that 9,700 mark. We've corrected again. But if you look at the shorter term picture, it has started becoming constructive. So over the last 3 months, it made bottoms around 8,100, 8,200. Yesterday was a very strong move, one of the few days where it actually made a move with a price action crossing very quickly one of the larger candles over the last 1 month. The recent swing highs of 8,750 got crossed. The highs in February were around 89.60. So technically, the stock has given a triangle breakout yesterday. So at 8,700, 8,800, it's a buy. I would expect it to go towards 9,500, 9,700. And we've seen that similar breakouts happening one by one in a lot of auto-related names. Out of nowhere, we saw Bajaj Auto breakout. Tata Motors has given a breakout. So all the stocks which were not moving for the last 1, 3, 5 years in the auto pack have started showing momentum. So extremely positive on Maruti at current levels. It could be a good trade. A dip today would be an interesting opportunity to buy. An initial target price would be 9,500 to 9,700. I would keep a stop loss at 8,600.
Deepan, any view as far as pharma sector is concerned? Do you think pharma is a space which is looking interesting, or at least valuation were beating out of the whack? So any positive news led to an up move?
I think pharma, you can't paint all the companies with one brush, and selectively there are bright spots depending upon specific product categories and specific business models. But by and large, I think that entire formula of setting up capacity in India and exporting to US generics market and create a value proposition, I think that entire business model is clearly crumbling. And investors are not really interested in companies which have large exposure to global markets, because we are seeing fast commoditization of APIs and formulation prices over there. Focus and interest is more on companies which have a which have a strong domestic presence, and large part of the revenues come from selling pharmaceutical products within India. Keeping that in mind, we are eagerly looking forward to the listing of Mankind Pharma, with 97% type of revenues coming from India, and strong focus on brand development and actual marketing to the doctors and some OTC products. I think it has a very differentiated business model, and perhaps it at a premium to other pharma companies as well. Another company which comes to mind is JB Chemicals, again heavily focused on the domestic market, aggressive when it comes to acquiring brands also, as well as in pushing their own super brands. So you need to be a bit selective when it comes to pharma, and valuations are reasonable per se in the sector. But as I said, I think there's intense competition in global markets, and that's not going to go away. I think there are structural changes which have taken place over there.
Okay, let's talk about some of the other result reactions that we are likely to see today. Kunal, any sense on the charts of KEI Industries, and even from the pharma space, Cipla has a positive news flow that it got 0 observations for one of its units in US. Anything on the charts for these two?
So KEI Industries, I think most of these mid-cap names, they've been doing exceptionally well. KEI Industries, if I'm not wrong, is already perched at a fresh life high for itself. Yesterday, the stock managed to hit those levels of 1900 or 1880 plus levels for itself. So nothing changes in terms of the view that the long-term charts are very attractive. But the only concern is the risk reward when you're buying these names at the high end of the price trends. The risk reward may not be very attractive. So either you have to tweak it in terms of the time holding period for these names, or else to try and reduce your position size when you're looking to buy these stocks on strong rally phases. Cipla could be interesting because the pharma index has already shown signs of a strong turnaround after the last 1 month, 2 month of price recovery for most of the pharma names, and especially the mid-cap end. So Cipla has been holding about the 900 levels in the last couple of days specifically. So assuming if the stock manages to hold on once again about the 900 mark, this could be a potential strong breakout for Cipla, and we can expect 960, 980 as a near-term target for the stock.
When we get, like Cipla hit 1000 when the index was low, and now it's 900 when the index is making up move. As you said, other names did well. Similar, Sun Pharma would be a similar case. How do you look at these large cap names when others are performing and they are not? What generally happens after that?
So I go back to the same, similar example. In 2020 start, the mid-cap IT stocks actually started to outperform significantly the large-cap IT names. So if there are two metrics which are being compared, the mid-cap IT stocks I think rallied by 3x to 5x on an average from the 2020 lows, but the large cap IT names, they performed I think 1x, 2x approximately in that kind of a time span. So there are times when the large cap IT stocks or large cap names from each sector, they may probably act as more laggards, but they may be more strong and sturdy performers. They are not prone to extreme amount of volatility. So I think the likes of Cipla, Sun Pharma, and traditionally pharma stocks are categorized more towards the low beta names. But there could be high beta stocks, for example, Glenmark, Zydus Life, Aurobindo Pharma. These are slightly higher beta stocks within the defensive pack of pharma. So, one has to probably go into a selective tilt, whether he's inclined towards more mid-cap names, then I think maybe shift towards the likes of Aurobindo Pharma, Glenmark or Zydus. But for someone who's looking out for traditional large-cap names, in the likes of Cipla, Sun Pharma at 10%, 15% correction, they are always a good buy.
All right, that's the pre-open rate, and no surprises to see a bit of red on the Sensex, perhaps just about adjusting on the Nifty, but for now it's showing you a green tick by about 0.5%. Let's find out then what the outlook is when it comes to mid-cap strategies as well from our guests. And Naresh, what is it that you're picking out for the day?
So continued like Federal Bank in the small cap banking space, the stock has slowly and steadily moved up over the last 3 sessions, a short-term triangle breakout on multiple bottoms made around 125 over the last 6 months. And if you look at a little longer term chart, the stock made a top around this 125 mark in 2017. Now that has become a base. So a classical long-term retest done after the breakout. So out here expecting a fresh move into all-time highs, a short-term target price of 150 and a stop loss at 129.
Okay, Federal Bank it is. What about you, Kunal?
So I'll go with the buy on DLF. I think even at current levels of 420 approximately, it looks extremely attractive. I think the stock has confirmed breakout on multiple time frames, extremely strong volumes, the sector picking up quite well, and apparently this stock has been acting as a leader for the entire real estate pack in this last 1 month of price rally. So this could be a renewed change for the stock. Buy with a target of 440, stop loss at 410.
Wanted to highlight some pre-open rates before we move forward. Let's pull up Indigo. That's logged in upper circuit, 10% higher. Of course, these rates need to settle. It's just 901. But important to track what they're suggesting even in the pre-open. Bombay Burma, on the other hand, which is expected to have a bit of an exposure with respect to ICD and loan given to Go First, is seeing a decline of 18%. So Interglobe Aviation sitting higher as far as the trading session goes. And let's pull up Bombay Burma as well. That's showing a solid decline. And then you have the banking names which are on the back foot. So Bank of Baroda, PNB, Central Bank, these are the banks who are said to have exposure to Go First, and all of these are likely to open on the back foot. That's what the pre-open rates are suggesting. And then of course we are watching out for some result reactions. So Spandana Spurti suggesting an uptick, and Tata Steel is the other stock that I want to highlight. That's also trading with a gain of almost 2 to 3%. So important to track all of these companies when they start off the trading session. But in the meantime, let's take a look at what are the headlines coming in from across the globe as well. US short seller Hindenburg's latest target, activist investor Carl Icahn's energy to pharma conglomerate Icahn Enterprises is the one which is getting targeted by the Hindenburg report now, because the report claims that Icahns enterprise economic structure is likely to be a Ponzi scheme. Icahns fortune sank by unprecedented 41% to $14.6 billion as he went from 58th richest person to 119th in a matter of a few hours itself. US Vice President Kamala Harris is all set to meet the Microsoft and Google, OpenAI and Anthropic to discuss AI development going forward. The Vice President is expected to address the need for safeguards for potential risks that are stemming from the artificial intelligence, thereby also emphasizing on the fact of the importance of ethical innovation. Tesla has hiked prices in as many as 4 regions, including Canada, China and Japan, as well as the United States. This after the company had in fact slashed the prices of its top-selling vehicles at the start of this year itself. The US car maker has raised the entry prices for its Model Y as well as Model 3 EVs in the US by around $250, I beg your pardon. This also, remember, is the second hike in less than 2 weeks that the company has announced, and this is coming after the multiple price cuts that the company has taken in the past. And in a strange occurrence outside London's Buckingham Palace, the police has arrested a man after he was suspected to be throwing what looked like shotgun cartridges into the palace grounds. This, remember, comes just days before King Charles III coronation as well. Well,
around 3,000 stranded Indians have left the crisis-hit Sudan for Jeddah till now. This is intensifying the Operation Kaveri to rescue citizens, and another Operation Kaveri flight which will be carrying 231 Indian evacuees reached Ahmedabad yesterday. Meantime, Rohit Sharma's Team India has been crowned the new #1 side in the Indian ICC Test rankings, with the team leapfrogging over Australia.
Coming in, but the Supreme Court has refused to entertain a plea seeking a stay on release of the movie The Kerala Story on grounds that it's a worst kind of hate speech and an audio-visual propaganda.
All right, let's move on. And Cipla is in the spotlight. There's a note that's come out from Jefferies where they expect Q4 results to be strong for Cipla. They've also laid out some of the key factors that could impact the stock down the line. We were just discussing the technicals. Now let's understand the fundamentals. Vamakshi joins in with all that cover from D Street. Vamakshi.
Well, yes, Cipla is on our radar. We have a brokerage note that is coming from Jefferies, and as of now, they've actually maintained a hold rating with a target price of 900 per share. But going ahead, come May 12th, we are expecting the company to report a good set of numbers. But apart from that, Jefferies is expecting a considerable stock moving news on Cipla over the next few days. Now, a commentary on their generic Advair's approval from US FDA, as well as the classification of the Indore plant in the second or the third week of May, will be important factors to watch out for. Now, if the plant classification is quite favorable for Cipla, Jefferies is expecting that the stock could rally towards a bull case value of nearly 1,095 per share. If not, the stock is expected to test the bear case value of 740 per share. So that was Cipla for you. As of now, the stock is in focus as Jefferies believes that there is some considerable stock moving news on Cipla expected over the next few days.
Thanks, Vamakshi, for that. Just address the flashes at the bottom of the screen. There has been considerable softness when it comes to 10-year back home as well. It's now almost at that 7% mark. Off late, we have been seeing it hovering around 7.3, 7.4. But now it's at 7.06. But Dipan, wanted your take regarding RVNL as well and other railway infrastructure companies. If you track, the stock has been on a crazy bull run.
Yeah, that's right. I think these are great times for railway companies. First time I've seen in so many decades that railway stocks have performed the way they have. But then this is in line with the larger capex cycle which we are witnessing in this country. And railway stocks, after many decades of underinvestment by the government, are seeing a surge in fresh capacity, modernization, and increased focus on safety, which is driving these railway companies which either do manufacture capital goods for the railways or provide finance or provide allied services. And valuations were cheap in the beginning of the year. And with good kind of earnings visibility and expectations of better performance for the next 2-3 years, if not longer, we are seeing valuations move up and earnings also shooting up. So great times for railway companies. The strategy has to be to look at opportunities to enter into the sector. Right now, I think there's a high degree of momentum behind these stocks, but they will tend to cool down in a few weeks' time, and buy-at correction would be the better strategy. But I think from an investor's perspective, this entire capital goods space, which has got subsets like defense, engineering, construction, electrical companies, engineering companies, railway companies, specialized capital equipment manufacturing company, I think across the board, we are seeing very good order inflow for them, and margin management will be also pretty favorable going forward. So that's one large investment theme which investors certainly should be overweight on.
Okay, fair enough. Meantime, Dipan, what's the outlook as well when it comes to some of these counters within the entire retail space? Given the fact that we have seen them a buzz off late, given that momentum and demand really has been intact, there is a lot of competition still. So would you be picky and choosy?
That's right. I think retail is a great long-term investment play. And, all the companies in the retail sector, right from Shoppers Stop to Trent, I think are doing pretty decent. We are seeing them expand their retail footprint. And we are seeing the premiumization trend also playing out pretty well over there. Of course, in Trent, they have this Zudio, which is value retailing, which is driving growth for them. V-Mart has been a bit of a disappointment, but once rural spending starts to pick up, this company also should do pretty well. But within the retail space, I think the real action and our interest is in the specialty retail companies. Companies like Vedant Fashion, that's Manyavar, Go Fashion, or the Go Colors company. Then there is Metro Brands. I think to an extent you could even add Landmark Cars to that. Ethos. I think the common line is that they retail specialized or special products, and they are market leaders over there, and they have the capacity to a large runway to expand their network as well. And balance sheet quality is good. Return ratios are pretty high. Valuations, of course, also on the higher side. I think these specialty retail companies, they may kind of outperform the general merchandising or general retail companies over the medium to long term.
All right, Dipan, good to have you on board. Thanks so much for joining in. Let's get you the index calls then from our chartists and find out what exactly they're advising, given the fact that for now we're at 18,100 on the pre-open rates. Kunal maintains his strategy of buy on dips. Naresh and Kush believe that it's a hold call on the Nifty, though remember both have alluded to the fact that around the 18,200 mark you're in for a bit of a pause. What about the Nifty Bank Index? Three divergent views. Buy on dips, says Kunal, book profits and hold. So really have to strategize as to how one should be dealing with the Nifty Bank.
Okay, so let's track what are the stocks which are buzzing in the pre-open. So Bombay Burma is down, Spandana Spurti suggesting an uptick of 9%, and then Indigo is also flying away in trade. And not just the aviation stocks, even the rail stocks. So RVNL continues to be higher, 4% gain coming in there. And then the crude prices have declined overnight, and that's the reason some of these paint companies are reacting positively. AkzoNobel is up around 1.5%. Kansai Nerolac is up 1.5%, and the entire companies for which also crude derivatives form a large part of the raw material is reacting positively. So CAT is trending higher by around 1.3%. So a lot of stocks ready to track. I asked Naresh about Spandana Spurti, Kunal, but your take as well. It's suggesting it's likely to open around that 690 mark, and Naresh was flagging out that if it has a gap up opening, the risk reward might not that favorable. What's your take at 690 levels?
Well, I would believe that in case if the stock actually opens above that 690 odd mark and if it sustains, this could actually be a very strong breakout for Spandana because the stock is coming out of a huge consolidation, almost a 1.5 year consolidation. The last time the stock had managed to break past about the 690 mark, or in fact had fallen below the 690 odd levels, was I think in the end of 2021, September or October 2021. So almost after 1.5 years of consolidation, this could actually be a good turn of events for the stock price. So I would wait out for the stock maybe on closing basis. If it sustains above this 690 odd levels and in fact even grows beyond those levels, that's a good zone to buy.
Surprised that there's no big move on Tata Steel. Naresh, quickly we are heading into the open, but a quick word on Tata Steel.
So technically the stock still is shaping up for a bounce eventually to 120-25 levels. So would keep a stop loss at 105, and if it dips closer to 108 today, that would be a risk reward trade. The stock has made a strong base over the last 3 to 6 months. The rest of the steel names have recovered well. So slowly and steadily we could see a move in Tata Steel as well, as my view. So buy on dips is the trade.
Okay, so that's the take coming in, but just 50 seconds for the session start. And yes, for the last 2-3 trading sessions, there was positive momentum. In fact, 6 days on a trot, the Nifty has been on the higher side. But today there might be a bit of reversal, given the weak handover that we have got from the US as well. A sharp cuts when it comes to the regional US banking stocks, and that's the reason the Dow and the S&P, kind of were down anywhere between 1 and 1.5%. And then, of course, the big cue to watch out for today is the Fed meeting. A 25 basis point hike is largely priced in, but the key question is it going to be the last hike? Any indication coming in from the Fed with respect to that will be important. And of course, back home, it continues to be very, very earnings and stock specific. That's what we have seen so far. And today as well, it's going to be about Tata Steel, Spandana Spurti, Home First, KEI, Aztec Life Sciences, because these were the stocks which were in focus. And then the Go First saga. That is the other talking point in the market. So reaction on the banking names on account of that will also be something that we need to watch out for. First rates for you on the screen, 18,140 thereabouts, 18,100. Actually on the Nifty is broken, so 18,084. Starting on the back foot, pretty much in tandem with what the SGX Nifty was suggesting. Sensex also down about 0.3%, but the market breadth is even Steven. It's tilting a bit in favor of declines, but just around that flat line. Let's take a look at what are the stocks and sectors which are performing today. On the sectors, it's mostly all red today. It's the PSU banking names which are on the back foot. Central Bank of India reacting to the exposure it has to Go First is down about 4%. You also have a similar reaction coming in on Bank of Baroda. Then other names like Punjab Sind Bank, PNB, UCO Bank are some of the other names which are on the back foot. IT is under pressure, especially Emphasis, because the US regional banks cracked overnight. Emphasis has over 80% exposure when it comes to US. A large part of their revenue comes from the financials and the BFSI, so that's seeing a crack. And similarly, Tech Mahindra, Emphasis Jitters, Coforge. These are some of the other names which have started on the back foot. In terms of the result reactions, Spandana Spurti is one stock that we want to talk about, and then of course Indigo, because the reaction will be coming in from the go first turbulence. So Indigo is starting high by around 5 to 6% if I have it right on my screen. Yes, 8% gain coming in there, and the railway stocks continue to chug along. So RVNL is up a good 6%. Home First is seeing a result reaction, 3% higher on that one. Positive reaction coming in on crude users. So Kansai, Nerolac, AkzoNobel, these are some of the counters. Bombay Burma is also in focus because they have some exposure via ICDs, etc. to go first. So Bombay Burma is down about 8%. And then DCM Shriram, which is a result reaction, is down 4%. Ditto for UCO Bank as well, 4% cut coming in. And the other names, as I pointed out, from the PSU banking space is really the space which is taking a bit of beating. So Central Bank, Bank of Baroda, Union Bank, IOB, Bank of India, these are all the counters which are on the back foot, Avan. But overall, it's a tempered start for the market, but not far away from what we were expecting.
Yeah, and the Nifty Bank is already down 0.5%. The frontline index as well, as we speak, it is falling further. So we'll just have to wait and see where those rates stabilize for now, even keel when it comes to that market breadth. Naresh, let's get in a quick take on what your first trade is and your view on the index.
So going defensive, looking at Biocon, that looks interesting for a mean reversion trade. From this 235 to 38 levels could go towards 260 in the short to medium term. So liking Biocon at current levels for a buy.
Okay, and let's find out Kunal's first trade, and he believes that one should be booking profits in Bajaj Auto. That's the advice coming in from Kunal. But let's connect.